Good evening, guys. Welcome back again to our Not Selling Night show. And as you guys may have noticed, we are slowly touching more and more on e-commerce related stocks in our Not Selling Night show, as we are actually preparing for our thematic deep dive into e-commerce related stocks, which is going to be one of the offerings for our KayaPlus Premium Club membership. So today's company will also be a component of it, but it will be more of a general and more simplified kind of introduction to the company. And if you are interested to join us in our upcoming thematic transcripts on e-commerce, do check out the link in the caption below. Right, let's go on to today's company or REIT in limelight, which will be Mapletree Logistic Trust. So of course, the question will be that whether REITs will get badly impacted by the e-commerce. So think again. So as usual, we'll start off with our disclaimer. Whatever that we are going to be talking, companies, REITs, will be just for education purposes, and you can also take it as entertainment. Do not take it as a buy, hell, or hold decision, and do your due diligence and analysis before investing into any potential one that you think have any upside. So let's go straight on to the business info. What is Mapletree Logistic Trust, and is it any more better than the existing REITs in Malaysia? I'll pass it to Chun Beng to take us through.
Yeah. So I think before we start, as usual, need to bring you guys through the REIT structure, or in this case, is a trust structure, and how you and me put the money into this trust can get, let's say, distribution in dividend form and so on. So as usual, there will be people like me and you put in the monies, or the sponsor, in this case will be the Mapletree Investment Private Limited, putting the money into this trust. And of course, when the trust itself is empowered, they will actually go and actually manage all the properties that's under their control. And of course, as part of this management, they will assign property managers and also managers to manage the properties in terms of rental collections, and of course, whether you wanted to improve the properties qualities. Typically, it's done through asset enhancement initiative, or you might see this word appear quite frequently in REIT-related stocks, which is AEI, stand for Asset Enhancement Initiative. And all this management of the property will end up come up with some yield. And then, of course, this yield will eventually go back to the regular investor in distribution, and you can actually get the dividends based on the declaration every be it quarterly or every years, right? So let's go into the deeper look in this trust, which is Mapletree Logistic Trust. It's basically owning quite a huge sum of number of properties under their control. So they actually manage up to 163 properties. Mainly it's about warehouses, because they are in the logistic industry. And all these properties is having a very high occupancy rates. So you can see it's about 97.5%, averagely across all the properties. And of course, the total net lettable areas is about 6.4 million square meters. And this is actually across multiple countries. So even though it's a Singapore REIT or Singapore trust, the main areas is actually happening in China, followed by Singapore and the rest. So you can see Hong Kong, Japan, South Korea, Australia, Malaysia, and even in Vietnam and also India, they are having some of the property under their management, right? So this is a REIT that you can expect the management or the property managers are trying very hard to actually expand their portfolio. So every single year, they will do some strategic acquisition. So this is basically the list of properties that happened in FY 20 and 21. So you can see it's not only focusing in one area. So from the left, you got some of the purchase happening in Australia. They also have about 8 properties happening in China and Vietnam, and covering also Japan, South Korea, and also India. And different area are able to actually give different type of yield in terms of the NPI yield. So you can see, of course, it's a diversification kind of act. So they based on the strategic in acquisition, and then when it average up, you can at least get about 5% in returns, and this is quite a predictable rate that you can trust on, right? So in terms of occupancy, like what I shared before, is at least 97.5 in average. But if you look into the latest number, which is as of 30th of June of 2021, you can see all the occupancy rate is at the high side. So some of the country even have about 100% occupancy rate. So for example, Malaysia, Vietnam, and also Australia. So this can give you a peace of mind. You put inside, you know, definitely they will actually able to collect the rental, and you'll be able to get the distribution at the end of the quarters or financial year, and then you can get it in dividends. And of course, this is like the top 10 tenants, if you see it from a gross revenue perspective. So their top 10 tenants actually contributed up to 25.6% of their entire gross revenue. And this is coming from a different guys. And most of it is actually related to, be it a big retail change or e-commerce related. So for example, CWT is the one in Singapore. And if you take a deeper look into China, which is one of the highest number in terms of net lettable areas within MLT, which is Mapletree Logistics Trust, is actually coming from 2 of these tenants. Of course, there are more, but this is the 2 that giving the highest contribution, which is JD.com and also China, which is related to all the e-commerce giant in China. And of course, if you take a deeper look into the Australian market, you have Coles Group and also Woolworth. So all this is actually related to big retail chains like Walmart in US, but then is the Walmart equivalent in Australia. So it's all about retails and also e-commerce within the portfolio of Mapletree Logistics Trust. And if we try to break it down by industry, from a gross revenue perspective to this trust, you can see majority of it actually coming from F&B and also consumer-related products. So during this MCO and all those things, you can see there's a increase of demand and all related to electronics, fashion, and so on. So the left-hand side is basically all the customer or all the properties under their control. And on the right-hand side is the related to all their latest acquisition. And majority of it, majority of the industry is about the same. Of course, the latest acquisition have more coming from the F&B industry due to the fact that a lot of people, instead of going out to buy, they actually need a warehouses to also process some of the product to get it delivered, go to your house straight away. So for example, this is something that you can take a look. And electronic and also IT also see an increase in terms of their latest acquisition breakdown as well. So this pretty much sum up MLTs. And then, of course, I'll pass to Jupan to actually continue with the sharing of the financial info.
All right, thank you, Jun. So, yeah, I think if you look into the so-called breakdown in terms of tenants and also the contribution and also the prospects of this REIT, many might think that it is a REIT that could be disrupted by e-commerce, right? But if you think deeper again, and also maybe look into the financial info of this REIT, whatever that has happened in 2020, we will actually get a little bit of hint whether is this REIT going to be heavily disrupted by the e-commerce trend as well. So we'll look into the financial info and then try to give some thoughts and also comments on Mapletree Logistics Trust. But before that, here's a little shout out to what we are currently offering. So we do have a premium club subscription where we actually talk more on stocks in a more detailed manner and discuss them in our private group. We have a private Facebook group, and this is a space where like-minded people gather around, and then we have some fruitful discussion on companies around the world. And of course, we also do have private videos where we share private sessions with the members, and the latest one was on portfolio management. We also do have premium articles, premium analysis write-ups to our premium club members, and of course those who enroll in the Dividend Gems membership or class will actually get a report on how to actually gauge or using our methodology to gauge and screen out good dividend paying companies. Of course, one of the key highlights of Premium Club membership is actually the thematic sharing. So we will dig deeper into each revolving investment themes and find out the more high likely chances of survival and also capital gains from various companies inside different kinds of sectors. So we have covered EV, we have covered semiconductor, and the one coming up in the end of September is going to be all on e-commerce as well. Of course, just to give you a brief guideline or walkthrough on the entire value stream of e-commerce, you have the marketplace, online shops, the payment processing parties companies, your warehouse logistic REITs, and also your last mile deliveries. So these will be the companies that we will be covering in our in-depth kind of analysis and sharing. Of course, if you are interested, do consider joining us. The links will be in the caption and description box, and we look forward to seeing you in this very, I would say, ongoing learning kind of journey with KayaPlus. All right, let's go into the financial information. As you can see, this is a REIT that is showing very good kind of a growing trend, right? So for the past few years, going back up to fiscal year 05, you can see that this REIT has been increasing the amount distributed to unit holders in a steadily manner. And you can even look at for the year starting in fiscal year 17 and 18, the amount actually accelerated upwards. So due to the fact that the management actually foresee the prospects of actually tapping onto the potential of e-commerce, they have actually made some quite strategic investments into their warehouses back then, and hence you can see that the so-called investments have been paying off, and in terms of amount distributed, it has actually accelerated compared to the previous years. And in terms of DPU per unit or distribution per unit, it has also shown a very steady increase. So what we call this is actually an accretive kind of payment and returns to unit holders of this Mapletree Logistics Trust. And of course, in terms of the geographical diversification, you can see that this REIT actually has quite a sizable exposure in plenty of countries. So they have properties, warehouses in Singapore, Hong Kong, China, Japan, South Korea, and others as well. And in terms of the so-called breakdown, you can actually notice that they are actually having quite a number of it in, I would say, strategic located countries like Singapore, like Hong Kong, China. These are so-called countries which actually play an important part, not only from financial hub point of view, but also from a logistical point of view as well. And China being one of the countries that are very reliant and very strong in producing goods that are currently consuming worldwide. And of course, one of the key indicators or ratios that you cannot actually ignore when it comes to investing in REITs is actually the debt profile of the REIT, right? You can see that as of the so-called comparison between 2 quarters, the total debt has actually increased significantly because the REIT has actually earmarked some kind of investments and strategic acquisitions, but they also couple it with some of the equity financing options. So due to that, you can see the average leverage ratio actually dropped a little bit from 39.3% down to 38.4%. And of course, the weighted average annualized interest rate has also decreased as well. This actually gives us a sense that due to the current low interest rate environment, the so-called REIT is also taking the opportunity to refinance a portion of the debt at a lower interest rate, which would actually decrease the interest expense in the coming quarters. Of course, in terms of the interest coverage ratio, the more the REIT is able to acquire and also hold on to positive rental reversions, means that the net income or the gross income from the operations can actually cover more in terms of the percentage or the ratio compared to the interest that it's going to expense by taking on the debt, right? And of course, one key ratio or key metrics that's also quite important is to actually look through the debt maturity profile of the REIT. So you can see that it has been equally, I would say quite equally distributed along a few years ahead. So you won't expect the REIT to actually come into a certain difficulty situation where they are not able to refinance their debt. And do note that this is a REIT that has multiple exposure or multiple debt denominated in different currencies, and widely swing in forex exchange can also make an impact on their interest expense payment in respective kind of currency. And also, if you look at the current and historical trailing valuation, this REIT has actually increased significantly in terms of the valuation. So previously, it has always been trading at around 6% trailing dividend yield. But as of latest few quarters, when investors or even fund houses notice that the so-called increasing kind of accelerated kind of growth starting from fiscal year 2017, you can see that the dividend yield has actually dropped down from 7% to 4.89%, and as of currently even dropped down even lower. The trailing yield currently is only at 4%. So of course, but then again, if you compare the yield against other so-called relatively safer kind of investments, be it the 10-year Singapore government bond and even the so-called STI yield and CPF ordinary account yield comparison, is still quite sizable and interesting kind of return if you are someone who is looking at or looking for income distribution and income yield against a certain kind of investment vehicle to give you and provide you cash flow kind of returns. So of course, valuation, looking at the so-called increase or decrease in the dividend yield, you would expect that the REIT is actually currently relatively much expensive compared to the previous years or prior years valuation that it is trading at. But if we look at the so-called metrics, be it the return of equity, it has been relatively stable at around 8%. And in terms of the gross margin and operating margin has always been quite relatively stable. This is in the end an operations or business trust or a REIT that is actually being a so-called collecting rent from its tenants. So the nature of the business is pretty much predictable, and there shouldn't be any much fluctuations. And it all boils down to how prudent the REIT manager and even the so-called management is running the REIT to ensure that in terms of return, it is generated much more to be generated as distributions to REIT holders. Right. So of course, we will go through again. If you look at the price to book ratio, it is currently trading at close to 1.5 times the price to book ratio compared to the previous year, where it is just hovering around 1x price to book ratio, which indicates that the REIT historical relatively comparison is at a premium side. But then again, you have to really understand whether the REIT has the potential and also the so-called catalyst to even grow further in the coming years based on the so-called industry and also catalyst that might push or to improve the REIT futures earnings and prospects. Right. Of course, we have eventually come on to the end, which is the verdict for Mapletree Logistics Trust. Before I give mine, maybe I will just pick Chun Bing's brain. What do you think of this REIT? Is it better or one of the better REITs even compared to the so-called very good REITs currently in the Malaysia market?
Yeah, I think there's a few key takeaway about this REITs is a chance for you to participate in the e-commerce value change, because definitely they have warehouses not only focusing in, let's say, Singapore, but it's across multiple area. Of course, focusing in Asia Pacific country, let's say Hong Kong, China, Vietnam, India, Malaysia, Singapore, Australia, and so on, right? And then of course, if you are someone that seek for stability, definitely this is one of the stock that you can put into a watch list. High occupancy basically is equivalent to predictable. You put in $1, supposed to actually get 5% rental yield. 97.5% will get it. For example, if you purely factor it against the occupancy rates, and this is something that they didn't stop expanding, meaning every now and then, every quarter, they might have new acquisition. So even though for example, some of the area might be impacted for whatever reason, the other area will actually try to cover it. So all in all, it's a very high quality REIT in my opinion. If you do checklist one by one against the REIT checkpoint, you might pass a lot of the number. But of course, the only drawback is maybe the valuation is slightly at the premium side if you compare historically.
Yeah. So I think you pretty much touched on all the good side and the bad side of it. But I think that if you want to really consider or analyze deeper for a good REIT, which is at a relatively expensive price, I think there are additional steps or measures that we need to actually take a look on. And that would be covered in more detail in our upcoming thematic transcripts on e-commerce. So we'll also touch on how the REIT manager actually undergoes financing, whether it's from debt financing or even from the equity side of it. And at the end of the day, would the unit holders be the ultimate, I would say, would you actually benefit by actually being a Mapletree Logistics Trust REIT holder if you continue to stay with them? So we'll touch on more detail in our upcoming thematic transcripts, but I hope that this provides you a basic understanding and also propel you towards some sort of analysis that you might want to do before you consider investing into this REIT. So that's it for today. Let us know what kind of other companies that you want us to analyze and share with you guys on our Not So Late show. And we'll see you in the next episode, as always, on Thursday night, 9 p.m. See you next week. Bye-bye.